Welcome everyone to Charts Focus 1, where we teach how to work hard and trade smart. And this week, we're going to see a huge injection of price volatility as we have a lot of catalysts that will set the market tone for the rest of the year. Some catalysts include the November CPI data, FOMC meeting, jobless claims, and OPEX. So it's going to create a storm of price volatility that you guys might just want to avoid. So if you guys want to just sit out for the rest of this week or maybe until Friday, that will be a great idea if you just want to avoid the headaches that could come along with all those catalysts mixing with each other. So with that in mind, let's go over the markets. Now I want to start with SPY futures since the futures market is open right now. And so far, we have a gap down from Friday's close, and we aren't seeing too much of an action here because we don't have the European markets open just yet. They will open in about 5 to 6 more hours here, and SPY futures should be affected by that European markets open. Now, the major level that I'm looking at for SPY now, SPY futures, is that I'm looking at the 3945 level that I've given to you all multiple times, and I'm also taking a look at this intraday level of 3979.50, or if you guys just want to round up, 3980. So for the first, I would say Monday and Tuesday, we might see just consolidation between these two ranges. But obviously, we do have CPI data coming in on Tuesday, so that can completely change. But I would expect to see at least Monday to have a very, very tight price action. And if we don't somehow get any type of huge surprise over inflation, then Tuesday will also be just a consolidation day as the market waits for the Federal Reserve and what they're going to do with the interest rate for the rest of this year. Now, for SPY futures, that's basically what I'm looking at for just this week. And if you translate that over to SPY now, okay, SPY ended up with a very, very bad day on Friday. So it was a very bad week, and it was also a bad day. And if you just take a look at the daily time frame here, it simply looks like a bear flag, right? We have the pole right here of this bear flag, and the past 3 trading days, so since Wednesday, Thursday, and Friday, we have made a bear flag, the flag of the bear flag so far. So we have the flagpole and the flag, and this bear flag can become an indication for us to see whether or not sellers will continue to push lower, and we can have another second leg lower after we break below 392. So this 392 level, the support level, is very, very big. If you even go to the monthly time frame, all right? So this is the December monthly candlestick, and so far we haven't hit the previous month's low just yet. We are very, very far away from the previous month's low. So if we're able to hold 392, then we can have a very, very large, difference between last month's low and this current month's low. But obviously, I can't make that assumption just yet because we just started the week of December and we're now in the second week of December. So in order for us to actually see if we're going to hold the support level, I would say this week we absolutely need to hold this 392 level and continue to move away from this level and reclaim the 10 SMA on the monthly time frame. And if you go into weekly time frame as well, right, things look even worse. So monthly, everything looks all right for now, but in the weekly time frame, we have lost the trend line to the upside here. So we've been making higher lows for the past 3 weeks. Okay, so obviously I'm going to not include this one because this is the candlestick on this week on the first week of November, where we saw that big, large, sharp move higher. And then after that came kind of the consolidation and then that slow rise higher to the upside. So this trend here was not held last week as we decided to close below that 395 level. And if you guys remember, the $395 to $400 range is still in play. How do we know this? Well, check out the last week's candlestick. We weren't able to hold above 395 and we closed below 395, which was a critical area of support that we needed to hold in order to push back the sellers, as the $395 to $400 range is a supply range. There is a lot of heavy selling going on in this 5-point range. So in order for us to get back above this range here, we need to hold 395 this week. And if we do decide to come back down to that 392 level, we should be seeing a bounce. And that should also coincide with the weekly 21 SMA, which has now caught up to the price here. And with this consolidation so far for the last 4 weeks, including last week, the 10 SMA has been catching up pretty quickly. So if we do decide to bounce away from 392, we should be able to see the 10 SMA on the weekly time frame here crossing above the 21 SMA in about 2 to 3 weeks. All right. Now, obviously in the next 2 to 3 weeks in that time frame, I would expect the price to start moving away from 392 and the 21 SMA, and eventually I want the price to be breaking above 400 and staying above 400. Now, if we go back in the daily time frame, so we've come back full circle, I expect us to, at least stay again at this 392 level, and this level is coinciding with all the bigger time frames here. So this is a very, very key level that we need to be watching out for this week. And if we do lose 392, right, since there is always that possibility, as we're about to see an injection of volatility in the markets, SPY should come back down to hit 390 to 389. And I've told you guys this last week as well in the Discord, that if we lose 392, then we'll eventually have to come back down to retest that 390 to 389 area, which is a previous level or area of resistance. And once we do bounce from that area of previous resistance, then that will become an area of new support. Okay, so that is it for the market outlook. Let's go over our first name for this week. All right, so Clorox. So this is the name that we've been in since last week. And I'm looking at this name on the weekly time frame. And the reason for that is that we're looking at this huge macro base that's basically been forming for almost a year. So it's a yearly macro base, and it finally seems like it wants to break out, because we've had nearly 4 areas where we've encountered a major level or area of resistance. So we have 1 here, 2 right here, 3, and then 4, which is where we are at now. And so with nearly 4 touches of this resistance area, so anything around 150 and below it, we should be able to see a nice big impulsive breakout above 150, as this name has been holding pretty well throughout this entirety of this year. I mean, if you guys just take a look at the weekly time frame on SPY and compare it to Clorox here, right? The price has gotten nowhere. And now it's actually staying in the upper range of this base, while SPY continues to stay within this downtrend or this descending channel that we've been making since January and February of this year. Now on Clorox, on the other hand, since January and February, we've been making this huge macro base. So something is clearly different here for this name, and we've been seeing this relative strength just absolutely holding this name up for the last couple of weeks as well. And with the last couple of weeks shown here on the weekly time frame, especially last week, we have a doji. And a doji is usually looked upon as a bearish candlestick, especially when it's formed right at a level or an area of resistance, and in this case the level of 150. However, I am bullish in the longer term because this name is in stage 2, and it's about to clear into potentially a larger stage 2 breakout, since obviously we haven't broken out yet above 150, a clear impulsive breakout to the upside. And with the 10 and 21 weekly SMA starting to curl up higher, with the 10 about to cross above the 21, we should be able to see more support coming in and more buy momentum coming in, so that we can see that breakout above 150 and stay above 150 once and for all. All right, so that is our first name. And then now we have our second name, which is AMAT, AMAT. So this one is a name involved with chips, right? Semiconductor chips. And something about this name really just caught my eye here, because semis last week had lost a lot of strength. So leaders like, for example, AMD start to move lower and lower with the market. But another leader like NVIDIA, okay, saw some great strength as we saw higher lows and higher highs being made last week. So Amat here, not being a leader, just caught my eye as a laggard semi name. So the technical setup here in itself is showing a lagging price action. And what we have here is a bull flag. Or if you just want to isolate the flag here itself, we're looking at a nice wedge chart pattern. And usually wedge chart patterns tend to give us two opportunities, one to the upside and one to the downside. However, I'm not going to be focusing on both sides here, because we're clearly seeing a bull flag with the flag pull right here, and then the flag formation, which is that wedge chart pattern. So in summary here, we have a macro bull flag and we have a micro wedge chart pattern. Now, if you also go to the weekly time frame, right? So this one is not yet in a stage 2 breakout, but this one's still in the stage 1, which can give us a stage 2 in due time if we do see this breakout over 110 and eventually 111.50, so $111.50. And why this level? Well, because on the weekly time frame, we have made a huge macro base, a multi-month base since mid-June. And if we're able to break above $111.50, then we can see that stage 1 becoming stage 2 as we start to stay above the weekly 50 SMA, which we've been basically retesting for multiple weeks here. And we should be seeing the 10 SMA crossing above the 21 SMA on the weekly time frame. So that will give us an even bigger bullish confirmation to the upside. Now, what I most like about AMAT is that it's held the weekly 200 SMA perfectly, right? And even if we did dip below it, we snapped right back above the 200 SMA, and we did not care to revisit the 200 SMA again. And instead, we moved away from it rapidly. And that is one of the traits that I want to see on the weekly time frame if I want this name to go from a stage 1 name to stage 2, where we see most of the breakouts happen to the upside. Right? So this one's clearly a great looking name with great relative strength for this new upcoming trading week. All right, so our third name here is NET. So just like AMAT here, and AMAT last week, NET was showing some incredible relative strength as well. And with NET making new highs last week, new weekly highs compared to the previous week, okay, we saw some incredible buying coming in, as we saw some strength in kind of the cybersecurity sector here. And with NET kind of sympathizing with that strength, we were able to push above the 10 and 21 SMAs. Now, also, guys, I apologize about my dog. She makes sounds, well, she hears sounds and she barks at them, but I apologize about that. But NET here tends to kind of have impulsive, wide trading days here, just like we saw on Thursday, especially when we start to break out into a new trend. So last Thursday gave us that sign, and NET can be moving up higher inversely to the market. And for the fact that we've been seeing this huge descending resistance here, right? So this huge macro descending resistance that we've been forming since late August, and we've been respecting it so far, gives me a clue that we can see another retest of this decent level of resistance. Because why not? We retested it 1, 2, 3, 4, 5, 6 times. So why not a 7th time, right? History repeats itself in the stock market. And we have obviously seen a rejection at the daily 50 SMA on Friday, but with such a bullish candlestick like we saw on Thursday, I would expect us to at least stay very, very close underneath the 50 SMA and consolidate under the 50 SMA, and especially start to deviate away from how the overall indices are moving. So this one's definitely going to be on my watch list for this week. All right, I'm going to be hawking this name because if we get over $50, then I'm going to get into this name and possibly see a profit taking around the retest of this descending level of resistance. All right, so our fourth name here is M. Now, M here is on the weekly time frame pulling back, right? So you might be wondering, wait a second, Andrew, why are we looking at a name that has been already in an uptrend for the past 2 months, right? Aren't you late on this name? Well, thanks to this breakout that we had over this falling wedge and the continued momentum over 21.50, because this level right here, okay, this level was the major resistance level on this macro base that was also within this macro falling wedge. And so we've had complementary bullish signals after the falling wedge breakout. So this name turned into a stage 2 from a stage 1 name once we broke above the 21.50 level. So this is the level that I'm going to be focusing on this week, because obviously we're seeing a pullback here, but an overall low volume pullback on the weekly time frame. How do I know this? We'll just take a look at the weekly volume bars here, right? We're seeing huge buying coming in on the volume here on the weekly time frame, while we're seeing very, very low selling volume bars, right? For example, one right here and last week as well. So for this week, all right, I'm not going to expect anything large coming out of this name, all right? I just want to see a simple retest of 21.50, and if we hold above 21.50 and we start to bounce away from the 21.50 previous old resistance level, then we will turn this level into a new level of support. And if we start to consolidate above 21.50 and stay above it, then we allow the weekly 10 and 21 SMAs to catch up and support the price higher. And eventually, if the price starts to move away from 21.50, we'll see the 10 and 21 SMAs crossing above the 50 SMA. All right, and that is important and key for the long-term perspective on M. And especially with the retail name showing incredible strength for the past couple of weeks and past couple of months, I would expect this pullback to be bought at critical levels of previous old resistances, right? So M is definitely something that you guys should be watching for the next couple of weeks and into next year. All right, so our last name here is NEM. So NEM is a gold name, and gold has been seeing some incredible inflow of institutional money. And if you guys check out the GLD chart, we have moved bigly, like really, really big since the low here in November, right? We've moved at least nearly 12% here. And with such a large move like this, okay, I'm going to be scouting for laggard names that are involved with gold. And NEM is a name that is lagging, right? And even though we've seen a rally off of lows here from 37.01, we're still stuck in a huge macro base. So just like M here, okay, as M with the 21.50 level, NEM is also coming back to previous level of resistance of $46. And this $46 is not a part of the macro base resistance because the macro base resistance from the past was $44. So with the pullback like this, as we saw on last week here on this weekly time frame, I would expect us to hold above $46, which is the major reason why I gave you guys that first entry for a bounce entry at 46.10. And if we do stay away from 46 and continue to move up higher and eventually not break below the previous week's low of 46.25, we have a good chance of seeing another second entry or a confirmation entry over $48, right? 48.10. And that will give us a nice momentum run up higher until we're able to see the weekly 10 and 21 SMAs catching up to the price. So obviously I want to see an ideal movement higher over 48 this week, because who wouldn't want to see continuous momentum to the upside, since 2 weeks ago we saw a large impulsive breakout to the upside, and that also created a breakout week over this weekly bull flag that we saw in the past 3 weeks here. Okay, so with NEM here, I would expect us to have a nice bullish candlestick this week, preferably and ideally above 48. So I want us to close above 48 so that we can start heading back to the 50s, and that could also give us a nice gap fill, this little tiny gap fill that we had from earnings, right? And if we have a gap fill, which is filling in a gap down, which was caused by sellers, we should be able to see a nice little short squeeze above 50. All right, so that's exactly what I want to see on NEM this week. And on a daily time frame, right, we just continue to we need to continue to ride the 10 and 21 SMAs. So if we continue to see some sort of weakness in NEM, since Friday we got a lot of volume, okay, I can't ignore this on a daily time frame. I would expect us to at least ideally respect the 21 SMA after retesting it and bouncing back above 46 and staying away from the 21 SMA. All right, so we need to see a lot of bounces on NEM here before we are able to retest 48 and close above 48 for the end of this week. All right, so that is it for this week. Make sure you guys read the market summary first before you guys are looking at this name, as always. But if you guys have already come to the end of this video, make sure you guys go over the market summary, because it's one of the most important market summaries that I'll be giving you guys for this year. And if you guys remember, I gave you guys the most important CFO Swinger Watch newsletter last year in September, and I accurately predicted what would happen for the entire year this year, right? So who knows? Maybe the market summary that I've written for you guys this week may just give you guys an insight, a foresight into what 2023 will bring us. All right, so if you guys like this video, make sure you guys drop a like down below. And if you guys aren't subscribed yet to the CFO YouTube channel, make sure you guys subscribe by hitting that subscribe button below. I'll see you guys all next week, and good luck trading. Thank you all for watching.